We just got a $1.1 million insurance payment approved for one of our partners. And the best part yet is we think we're gonna get increased to a little over $2 million. So the way we do this, we have an arrangement that lets us buy insurance for our acquisitions against any fraud committed by the sellers or any liabilities the sellers didn't know about or didn't disclose. And no matter what you do, there's no level of diligence that can make up for fraud. So we had a deal where basically the business went off the rails 2 weeks before the closing. So right after we had finished all the due diligence items and we were just waiting for a few closing items to happen. So this business, they lost their biggest customer, and then their second biggest customer, they cut their rates down to basically that our work for them would just be done at break even rather than the nice profit that the previous seller had earned. And the seller didn't feel a need to disclose any of this. They didn't think it was particularly material, which obviously it was. And as a matter of fact, within the purchase agreement contract, there's usually a clause that says that the seller is required to notify you of those types of things to give you the option to exit the contract. So all in all, looking at this, we calculated a $2 million loss of value. So through the first round with the insurance company, we've got it up to about $1.1 million that they have agreed that they will pay out. And we're still working on the rest. They follow the same thing. There really isn't a good reason for the insurance company to deny it. If they approve the other ones, they should approve these because they're exactly the same. That's just what insurance companies do. It's their job to pay out as little as possible. It's our team's job to make sure we get as much as possible. And ultimately, at the end of the day, contractually, they owe the whole amount. And that's why really solid record keeping is so important. We keep records of absolutely everything during the acquisition phase. We have every communication, everything that's been sent to us, everything detailed, itemized, so that when an issue comes up, we can come back to that and show exact proof of what happened. And what's great also is on the business, we took a big hit right out front, but our partner's been doing a great job of bringing the business back, starting to pick up new clients. He's cut a lot of expenses. We managed to save $75,000 a year by transferring the financial management to our team versus the individuals that were doing it for the seller. We cut redundant management, and our team's really been focused on collections. So this business has a lot of problems with customers just not paying, and the previous owner really just didn't worry about it. They didn't go after people. So we've been going hard on collections. We actually implemented a discount if you pay early, and of course penalties if you pay late. And those are escalating payments based off late payments to try to discourage the prior behavior of clients just paying whenever they felt like it. If it was 30 days past due, 90, 120 days past due, they just did whatever they want. Now, we're really excited about, at least so far, what we've won with the insurance company, and then hopefully more to come. Of course, if we didn't have the insurance policy, we could go and sue the seller for that lost value, but lawsuits are really hard. They can take multiple years, they're very expensive, and you almost always end up settling for some lower amount. So it's really something you want to avoid, and that's why we insure against it, because going to court sucks. And this is a great deal that highlights that we're there for our partners through thick and thin. The relationship only starts at the acquisition. And if you want to join, hit the link in our bio, apply for the program.